Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Gabriel, as always, nice to have a smiley face on the Friday.
When one looks at you, Brian, one can only smile.
Thank you. Thanks, Gabriel. Now, before we get your sagely advice, let's take a look and see how various markets are performing before coming back to you. We'll start with cryptocurrencies. We've got Bitcoin, which is at 33,074. It's down 3.66%. Ethereum is at 22,048. It's down 7.26%. Now, if we go over to regional markets, starting with Bursa Malaysia, one of the worst performing markets in the world this year, it's at 1,531.03. It's down 0.21%. The SGX is at 3,125.35. It's up 0.04%. Across the region, we've got the Nikkei, which is at 28,765.84. It's up 0.2%. Shanghai Composite is down sharply at 3,532.23. It's down 1.58%. The Hang Seng is also down sharply 1.6% at 28,365.36. And rounding up the numbers, we've got the ASX 200, which is 7,297.6. It's up 0.44%. Now, Gabriel, very mixed markets across the region, but particularly China and Hong Kong are down. What is the reason for that?
No particular reason, Brian. I think it's basically just the acts as well as the up of the market. Sometimes in this case, like Hong Kong and China is actually taking a breather. Of course, their performance is in contrast to the US, which actually in the first half of this year, as the S&P has notched up gains of 14%. Now we have to go back all the way back to 1988 to have this kind of outperformance. So essentially, the Chinese market's actually in need for a good catalyst. Some of the catalysts may come from, say, further relaxation of antitrust measures on tech companies in China that actually may help and propel some of the key sentiment forward.
Now, what's your view on Xi Jinping's speech yesterday? And do you see any sort of impact on markets?
Very minimal, Brian. I think essentially what he actually summed up was a very gusto, 100-year celebration for the Communist Party leading the country. I think essentially in the same vein, he has warned other sovereigns not to actually trample on China, which is essentially a bravado kind of speech. But I think underneath that, you'll notice that there are a lot of underlings in the language used pertaining to basically how China is helping developing the world, is actually trying to tell everybody else who is China's smart in the very first place, that actually China is looking for a very good peaceful coexistence in this part of the world, and in its continuous progress upwards for the rest of this decade and for the rest of the century.
Now, we've just got 130 nations agreeing to support the US proposal for a global minimum tax on corporations. Now, how is that going to impact the earnings of global companies who have often used countries like Ireland to minimize their tax and therefore increase their after-tax profits?
You're right, Brian. I think essentially some of the profits were actually took out of low cost or low tax domicile countries like Ireland, Cayman, a few other countries. I think essentially when the proposal actually came out, most of the big tech, including Amazon, Google, Apple, supports this, because essentially what it means therefore is that if you actually have, on the one hand, removal of digital services tax, which, for example, in France's case that came out in 2019, actually imposes a series of taxes ranging from 3% minimum. And so if this 15% that's been talked about by the 130 countries is talking about a floor base at 15% and not an upper case, then that would be great.
Now, final question. The markets have been trading pretty much sideways for most of the week in anticipation of the non-farm payroll numbers that are out later tonight. What's your view on how this is going to be impacting Asian markets?
Well, I think it's a monthly occurrence. For example, like the market expectation for this month, 646,000. Last month, the non-farm payroll numbers also came in just a notch below expectations. But I think what the market is actually looking for is that looking beyond the non-farm payroll and looking at essentially the CPI, PPI numbers next week is an indication of where inflation is actually moving. In fact, if you notice on many of your smart viewers on our program, every Friday, do join us. The way back in March when the 10-year bond yield went up to as high as 1.77%. What did we tell your viewers? We told them, it is very normal occurrence for the long 10-year treasury bill to be inching upwards. The only thing that one should be worried about as a smart investor is the pace and the rapidity. So in that case, we did tell you that for the 10-year bond yield to jump from 0.66% in October last year to 1.77% as of March this year is too sharp. And look what has happened, Brian. Since then, the 10-year bond yield has fallen below 1.5%. And look how has equity markets performed. They have actually zoomed out the best outperformance in first half of this year, has been exemplified by S&P. And we are looking at new listings now. TT has listed, this fresh has listed, and DDL has also listed in the US. So essentially, it's a hotbed of equities and a lot of money to be made.
Gabriel, as always, thanks a lot for coming on the show.
My pleasure, and have a good weekend.
Yeah, you too. We've been speaking to Gabriel Yap, the Executive Chairman of GCP Global, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our various platforms and like and subscribe to our LinkedIn and Facebook pages. Thanks a lot for tuning in.